Cool. So, hello everyone. Thank you for joining us at this Your Overseas Home webinar. So, my name is Ryan, and I'm a marketing manager here at Your Overseas Home. Today, I'll be chatting with John from Chase Buchanan about your financial considerations you should think about when moving to Spain. It's great to have so many of you with us today, whether you're watching live or demand. And once John has shared his presentation, we'll open the floor up to questions. If you have any as we go along, please do type your questions into the question tabs on the right-hand side of your screen. We do hope to answer as many questions or queries as we can today, but if we don't get around to them all, please don't worry. Any unanswered questions will be forwarded to John and his team at Chase Buchanan. So before we start, for those of you who have met John before at our virtual event, you'll be happy to know that we have secured the next date for our virtual show, which will be held on the Saturday, 16th of March. If you're new to our Your Overseas Home, it's a fantastic property show you can attend from the comfort of your own home. And it's designed to have the tools and connections you need to confidently buy a property overseas. So we do really recommend that you come along to that. So we have many more experts joining us in March than ever before, including Chase Buchanan. So make sure you get your ticket today and save the date. So yeah, thank you for that quick introduction. So yeah, let's crack on. So over to you, John. Can you please tell us a bit more about yourself and what Chase Buchanan do?
Yeah, thanks, Ryan. Absolutely. So I'll look to explain what we do, our services, and where our offices are based, and also give an overview about Spanish taxation for people that are looking to move down to Spain or already living here in Spain. So I'm going to start with telling you about who we are and about myself. So as you can see on the slide here, Chase Buchanan is a highly regulated wealth management company. We specialize in providing financial advice to expats around the world, and the core part of the business is here in Europe. So I work from our European headquarters. Well, we are based in Cyprus. However, we have local offices across Spain. So in Spain, we have offices in Marbella, where I'm based. I also spend a lot of time in Javia, which is in Valencia. We also have an office in Tenerife. And then we have offices in other countries in Europe, such as Portugal, France, Belgium, Cyprus, Malta, etc. As a company, we provide clear, unbiased, jargon-free advice and unparalleled ongoing support and reviews. What's important for us is that advice is fully transparent. So we like to explain things as they are to people in a very transparent way, and costs and fees are fully transparent. And we strive to provide the best level of service in industry, which means that we have the right regulations, the right structure, and the right people to advise our clients. I'll tell you a bit about myself as well. So I'm Swedish, and I've lived in Spain for the last 21 years. I came down as a student, and I've been working in Spain in the finance world. I used to work for banks in Spain. I used to work for international private banking as well, for Lloyds Bank in Gibraltar. And for the last 5 years, I've worked purely with private wealth management and focused almost exclusively on Spain. So I give advice to expats all over Spain. Everywhere where there are expats, I tend to focus on those areas. So it's mostly Andalusia, Murcia, Alicante, all the way around the coast, as well as the Balearic Islands and the Canary Islands. And we basically, what I do is, as a private wealth manager, I give financial advice on investments and pensions and help people with their financial planning, whether they are already in Spain or looking to move down. We make sure that their structures are as efficient as possible from a Spanish tax perspective. And if they need to take any actions before they move to Spain, then we help people to take those actions as well before they become Spanish tax residents. So I'm going to move on to tell you about our services. I already mentioned that we offer advice on investments. We help people with financial planning, retirement planning as well. So we help people have workplace pensions, for example, personal pensions, perhaps in the UK. We can review them to see if they are efficient here in Spain. or if there are any actions that should be taken to make it more efficient here in Spain. We also look at possibly transferring some of those pensions abroad if it's in the client's interest. We can also deal with US connected persons. That's something that we are, I would say, pretty unique with here in Europe, because a lot of firms that operate in Europe are unable to deal with US connected persons because of financial restrictions. So many firms in Europe shy away from any persons that are either US nationals or have strong links to the US, such as green cards, etc., or other links. So that's something that we are happy to do. We do have an advisor that's a US national with all the appropriate licenses to advise US nationals across the world. And as business, we also have an SEC regulated entity. So we comply with all those requirements that are necessary to advise US nationals. And then we help people, of course, with all kinds of investment objectives, such as educational fees, planning, and if we need to help out with insurance as well, we may be able to offer insurance-based solutions. So next thing to look at is the offices. So I mentioned we have offices across Europe and across the world. So you can see those offices here. So I form part of the Europe, excuse me, the European business. So being based in Marbella, I look after clients across Spain, but as you can see, we have many different offices internationally. Right. So I think that's
Cool.
probably about it, right?
Thank you very much for that introduction. That's great. And like John mentioned, Chase covers a varied amount of products and services that do. Feel free to shout and get in touch. So yeah, let's get cracking into the presentation. So what are the main kind of tax considerations for someone who is looking to move to Spain from the UK?
Yeah, so I think we should start looking at the tax essentials. We can look at how do you become a tax resident, what are your fiscal obligations when you do become a tax resident, what type of taxes you should be looking out for that you may be liable to pay, what is Modelo 720 that some people may have heard of, and how you consider your estate planning in terms of beneficiaries, setting up wills in Spain. Then we'll look at finally pitfalls to avoid that many people don't know about when they move down to Spain, because the Spanish system may be different from the system in the home country, such as the UK. And then we have a checklist as well that people can look at when they move abroad, move to Spain, to see that they don't miss any important items to consider from a financial planning point of view. Right. So yeah, that's the overview, and I'll just move on to explain about tax residency. Should I, Ryan?
Yeah, so tax residency is obviously a huge subject to cover when moving abroad. So when would I be considered a tax resident in Spain, and what would be like my fiscal obligations?
Yeah, so this is quite easy. The main rule says that if you spend more than 183 days in Spain in a calendar year, which is the same as a tax year, the tax year goes from the 1st of Jan to the 31st of December, then you become a tax resident in Spain in that year. So whilst that is the main rule, and that applies to most cases, the other rules that may apply as well, like if the center of your economic interest is in Spain, then you'd be liable to make a Spanish tax return. That's, for example, if you come down to Spain to work, you're likely to be required to make it do a tax return. And also, if you have a Spanish, if you have a spouse in Spain or dependent children that are residents in Spain, you may have to do a tax return as well. That's, for example, for offshore oil workers that they spend a lot of time abroad, but they have a spouse in Spain. They may be liable to file a Spanish tax report because the spouse is in Spain. At least that's what authorities assume. That's the general case, but you can always argue it in certain cases. Right. So if we continue with tax residency, what are your obligations at the time that you become a Spanish tax resident? Well, there are some main things to look out for, like income tax on worldwide earnings, capital gains tax, wealth tax, Modelo 720, which is a declaration of assets abroad, and inheritance tax in Spain. And as I mentioned earlier, bear in mind that the Spanish tax year goes from the 1st of Jan to the 31st of December, which may be different for your home country because, for example, in the UK, the tax year goes from the 6th of April to the 5th of April. So there is, when people move down here, there can be an overlap in tax years, and that impacts on financial planning. There may be things to look out for. Same time when people move back from Spain to the UK, for example, there can be an overlap there as well. So it's something to, when you're planning to move down or move back, it's always important to seek financial advice to see if you need to consider any financial transactions before you change country tax residence.
Nice, thank you for that. So yeah, as you mentioned on the slide before, income tax is a huge subject that needs to be covered, and a lot of our clients always have questions about how to manage income tax and what does it kind of involve. So how does income tax work? Does it matter if I'm working remotely for a company abroad, or does it matter if I'm working in that country directly?
Yeah, it's a really good question because nowadays, like especially since COVID, like a lot of people are now working remotely and they may have an employer abroad. So from a Spanish perspective, as soon as you become a Spanish tax resident, which is mainly if you spend 183 days in Spain in a calendar year, then you become liable for Spanish tax on your worldwide earnings from all your sources. So if you're working for a company abroad, and even if your salary is taxed abroad, like in the UK, for example, but you live in Spain, then you would need to declare that income in Spain. There are double taxation agreements in place so that you're not taxed twice on the same income. So if your income is taxed at source in another country and you report it in Spain, if there is a DTA in place between those countries, then normally you'll be credited for the tax you paid at source, and you'll just pay the difference on your Spanish tax return. The income tax in Spain is split into two parts. One is general income, which is taxed at general income tax rates. And then you have savings income, which is taxed at savings income rates. We're going to look at those rates later down the line. And then the actual income tax at general rates, which is for work income and pensions income mainly, it has a state element and regional element, and added together, they add up to roughly 19% to 47%, at least those are the state rates. However, Spain is divided up into 17 autonomous tax regions. So the income tax rates will vary from region to region. They are quite similar. They're not, no major changes, but there are slight changes, especially for higher income earners. They can go up to above 50% in certain regions for large income. And in all regions, you do get a basic personal allowance, which is 5,550. It can be slightly higher in some regions, and the personal allowance can go up with age. So people over 65 get a little bit extra, and then get it even more when they are above 75. And also people who are disabled can get an extra personal allowance as well. It's important to bear in mind that the income tax, like once you become a Spanish tax resident, you're liable to file an income tax return for that whole year, for that income tax year. So if for example, if someone, today's the 11th of January, if someone moves down to Spain today and spends the rest of the year here in Spain, they're liable to pay income tax in Spain for 2024. And that report needs to be done by the 30th of June, 2025. So it's always 1 year later by June that you have to do the return. So yeah, I think we covered this one pretty well.
Nice.
Hopefully that's clear.
That made complete sense to me. But yeah, obviously, if anyone has any further questions, be sure to ask in the questions tab, and John can cover it at the end as well. Right. Cool. So yeah, property obviously is a big area to cover, and a lot of our clients want to either buy a property to live in or buy a property to rent and make some money potentially overseas. So if I wanted to rent out my property that I've recently bought, is it taxable?
Yeah, it's a good question. So you're liable to pay tax in Spain on income from rental properties, and the tax you pay depends on if it's a short-term let or long-term let. So there are some allowances, tax relief for long-term lets, which is normally if it's over 12 months. And what a lot of people ask me about is especially linked to the UK, like if they have a property in the UK which wasn't sold before they came down here, it's like a buy-to-let, and they are in Spain now. How is that taxed? Well, that will be taxed at source in the UK, and you would also be liable for tax in Spain. And then because of the double taxation agreement, you would get credit for the UK tax at source, and you would just pay possibly a difference here in Spain. The rental income is taxed at general income tax rates, which we said the state rates are 19 to 47%. However, if it's a long-term let, you may get some reliefs, so it may not be as harsh. It may not take you to such high rates, or some of it may be exempt from taxation. But I guess the hassle of having a property abroad as a Spanish tax resident is that because it's taxed at source in your home country, such as the UK, you need to have a UK accountant to pay them fees, as well as make sure they do a report in the UK. Then you need to do the same in Spain, a Spanish accountant, pay them fees, and then you have all the worries about wear and tear, tenants, and void periods, and all these things. So if you don't live in a country, just a lot of hassle, I guess, having a property abroad and letting it out, and be maybe worth considering selling it at some point. And there are other structures who work much better in Spain to give you a tax efficient income to replace the rental income with less hassle and less tax reporting.
Yeah, that makes complete sense.
Yeah, and if you sell a Spanish property that's been your main residence for at least 3 years, and you are over 65 when you sell it, then you can sell that property tax-free. There are some occasions when someone moves down to Spain, and they just moved down recently, and they have a UK property that's sold when they just came to Spain. That may be sold tax-free as well if they're over 65 and they sell it within 2 years from that when that ceased to be their main residence. But once that 2-year threshold has passed, then it's very difficult to use that rule, or that wouldn't be applied at all. And then for people that are under age 65, and also people over 65, they can use the reinvestment relief for properties. So whether you sell a property in Spain or abroad, you can sometimes just reinvest the property proceeds into another property, and you can be exempt of tax on some of the gains, or all of the gains if you reinvest all of it. But there are certain restrictions that apply, so it's worth looking into that as well. But you need to have had that previous property as a main residence within a certain time period. So it's worth getting advice on such transactions, and speak to myself or a tax accountant, and look at a case-to-case basis whether you should take any actions on such properties. Right, and we let me see now. We got Spanish wills here as well on this slide, and one thing to consider is, like, when you buy property in Spain, to include that property in your Spanish will, we'll make sure it's covered. And because Spain operate a forced heirship system, which means that Spanish nationals by default, they have to give 2/3 of their assets to the children. And many of my clients are British. That's not really what they want. They want everything to go to the spouse on first death, and everything to go to the kids if they have children on second death. So if you like that free disposal of assets and not be bound by the Spanish forced heirship, then when you go to the notary in Spain and set up your will, you can tell the notary that you like the laws of your nationality to apply. And for British people, this is still respected as part of Brexit. So it means that if you want everything to go to your spouse on first step, that's fine, but you should really express that in your will to make sure that's very clear. And I think people that have stepchildren should be very careful when they set up Spanish wills, because stepchildren, and we're going to look at this later, they can be liable for very large inheritance tax on Spanish assets they receive. So it's worth taking financial advice if you have any stepchildren involved and live in Spain, and if you have substantial assets in Spain or abroad.
Okay, nice. That makes complete sense. Thank you for covering that. If we just go back to the last slide, actually, I know a lot of questions come in about the over 65. So can you be 65 or do you have to be over 65? So you have to be 66, or is it 65 and over basically?
I think as soon as you become 65 at that point on birthday, and if you've lived in a property for at least 3 years, has been your main home, then you can apply that rule.
Okay, that makes sense. Cool, thank you for covering that. So income from savings and capital gains, like what are the particular rates associated to savings and these capital gains?
Yeah, so we discussed that within the income tax, there is a savings tax bracket. So this is for interest from bank accounts, dividends from dividends from shares or investments, or it can be capital gains from transactions like selling certain investments with capital gains, or selling a buy-to-let property with capital gains. All that is taxed under these bands you see here, which goes from 19 to 28%. And this is per person. So each person has up to 6,000 of savings or capital gains that can be taxed at 19%. So if you have a joint investment with a spouse, between you can have up to 12,000 of such income, and that's still taxed at 19%. And you can see that it goes up to 28, but you need to have really large gains from investments to be charged at 28. It needs to be 300,000 plus per person. So I guess there's very few people that have that in one single tax year. So I guess these rates are actually really attractive, especially if you compare to the general income tax rates. And there are investment vehicles which we can offer residents in Spain, which are fully compliant with Spanish regulations and EU regulations, and allow you to defer a lot of the gain in investments, so it can be kept within a structure, similar to an ISA in the UK, where you can take an income and you're only liable for tax on a small proportion that you take out, which is just the gain element. So it's something that we will be happy to explain more in detail if someone is interested looking at options for their savings and investments here in Spain.
Okay, nice. Thank you very much for covering that. Regional wealth tax. So what are other wealth-related taxes that I should be aware of if I kind of wanted to move to Spain?
Right. So Spain is quite unique that on a state level, it has a wealth tax. So a wealth tax is a tax on your assets, and it's taxing your net assets. And the general state rules say that if you have assets above the exempt amount, which is 700,000 euros per person, so for a couple it's 1.4 million, you normally be liable to wealth tax. And you also have a property allowance of 300,000 per person. So a joint couple would, under the state rules, be liable for wealth tax if they use up all allowances at 2 million euro plus in net assets. And you deduct any loans, so it needs to be net equity. However, there are certain regions in Spain, such as Andalusia, Extremadura, Madrid, and Murcia, that have recently effectively eliminated wealth tax because they want to attract wealthy foreigners to those regions, and they don't want the wealth tax to scare off people from moving down here. So that's a really good thing, a really good development that we've seen, and this is something that we've seen over the last year or so. However, these are specific regions, and we've seen that the central government in Madrid hasn't really approved some of these changes that happen on a regional level. So they've imposed another tax, which is now applying in the regions where wealth tax has been eliminated, which is called the solidarity tax. But it only applies at higher thresholds. So it's for people that have effectively, after using up allowance and exemptions, you need to have 4 million euros in net assets per person to be covered by this solidarity tax threshold. And so I guess not too many people fall in scope of that. for people that have 2 million euros plus in assets, even here in Andalusia, even though wealth tax has been effectively eliminated, they still need to do the reporting of their assets for this purpose. But then there's no tax liability in the end, because it's kind of like offset on a regional level, but you still need to report it if you have 2 million euros plus per person in assets here in Andalusia or Madrid, Murcia, or Extremadura. So yeah, just to follow on, so we discussed the national solidarity tax, which is the higher threshold at 4 million. So that applies at national level and in all regions, including the ones that have eliminated the normal wealth tax. So basically in Andalusia, Extremadura, Murcia, and Madrid, you pay wealth solidarity tax at 4 million euro plus. However, in all the other regions where wealth tax still applies, then you have the 700,000 per person allowance plus the property allowance of 300,000. So as you can see on this slide, about 90% of wealth taxpayers in Spain do not go up to the solidarity tax threshold. So it only applies to just a few people. Yeah, and if you live in a region that has both wealth tax and solidarity tax, then of course you're not going to pay tax on your wealth twice. So any wealth tax that you paid will be credited on your solidarity tax return. Hope that's clear.
Yeah, that made sense to me.
Great, thanks.
Nice.
Right.
So yeah,
another slide here. Yeah.
We're coming towards 30 minutes now. So if we can not rush through these slides, but cover these slides, and then we can get into the questions and go over for another 10 minutes or so, just because we've had a lot of interaction today. So that would be great.
Yeah, absolutely. So should I talk us through Modelo 720 as well?
Yeah, I reckon just a brief overview.
Yeah, briefly. Yeah. So very briefly, if you have assets abroad worth more than 50,000 euros, you need to report those assets on a Spanish tax return called Modelo 720. The assets are split up between property, bank accounts, and investments. So if any of those asset categories exceed 50,000, it triggers the reporting need. And it doesn't matter if you split it up into 10 bank accounts with 5,000 euro each. As long as the total value per asset class goes above 50,000, you need to do this report. It's not an extra tax, just an extra report, because Spain would like to know what assets you have abroad. If we then look at inheritance tax and gift tax, so inheritance tax in Spain has very similar rules to gift tax in Spain. And it applies if you are a Spanish resident and get an inheritance, then you will be liable, you'll be assessed for inheritance tax in Spain. Or if it's a Spanish asset involved, so if you have a Spanish property that will be inherited by your children in the UK, then that property would be assessed for Spanish inheritance tax. The rates for inheritance tax, it's quite complex because it depends on the region, and every region's got different rules. Some regions tax quite harshly, even between spouses and down to children, which is quite different from the UK, because in the UK spouses can inherit tax-free between each other. So you have to be very careful with your planning when you move to Spain, and look at what the rules are in your region, and also look at your family situation, because as I mentioned earlier, if you have, for example, stepchildren that you want to benefit from your assets, you have to be very careful, because in most Spanish regions they would get a very harsh tax treatment, and you may need to take some actions to sometimes by restructuring your assets you can save a lot of inheritance tax, and something I'm happy to advise people on how to do. And one recent development we've seen is that many regions have improved the rules for inheritance for close family members. So close family members is normally spouses. Sometimes it can be registered civil partners, not all regions, but some regions, as well as children and grandchildren. So when it goes to those beneficiaries, then in all the regions we got listed here, which is Andalusia, Balearics, Canary Islands, Galicia, Madrid, Murcia, Valencia, all these regions you can virtually inherit tax-free within close family members. Right, and this slide just shows how Spain divides up beneficiaries by different categories, where the closer the kinship is, the more beneficial is the tax treatment. So group 1 is the top group with children under 21. Group 2 is all the other children are above 21, and also grandchildren and spouses, etc. And in certain regions like Andalusia and Valencia, civil partners. So groups 1 and group 2 get very good treatment in some regions, and in all regions across Spain, group 3 and 4, which are distant family members, friends, etc., they would be taxed quite harshly when they get inheritance, especially for larger amounts. The tax rates can go really high, as high as 89% sometimes. So it's really worth seeking advice if you have substantial assets and live in Spain, to see if your beneficiaries, if they would benefit from you doing a different type of structure. Right. So I think I covered all the tax slides now, Ryan. We're now getting to just the final slides, pitfalls to avoid.
Nice.
Sorry, I've talked a lot today, so hopefully this is still engaging. I'm trying to make it interact with Ryan, but it's very difficult when you try to cut off very complex topics so quickly. But pitfalls to avoid when you move down to Spain is, especially coming from the UK, is UK tax-free savings products like ISAs and national savings premium bonds are taxable in Spain. So there's no such thing as a tax-free ISA when you become a Spanish tax resident. So sometimes it's worth taking actions on those assets before you become a Spanish tax resident. Offshore bonds are not Spanish compliant. So sometimes people have set up life insurance-based solutions held offshore. Maybe they worked somewhere else and then moved to Spain. Maybe they set up in a place like Dubai or something. And those kind of solutions may not work here in Spain. So it's worth looking at your financial affairs and see if what are you set up in the UK or other places, if they are efficient when you move to Spain, because otherwise tax benefits may not be there. You may think it's tax efficient, but you may be fully taxable, and tax structures may not always work if they're not Spanish compliant. So all the solutions that we offer at Chase Buchanan, they are Spanish compliant, comply with regulations here, and they are tax efficient. We can offer vehicles that give you tax-free growth and tax efficient income. You should be mindful that the sale of a UK property, even if it was your main residence in the UK and you can sell it tax-free in the UK, it could attract Spanish capital gains tax if you don't move down at the right time. So if you move down at the wrong time of the year, you think you've sold tax-free in the UK, but Spain may think that you should pay gains tax on the sale. So it's worth having a chat with myself if you'd like to, if you're planning to move down, you want to make sure that that transaction is not going to be taxed in Spain, so we can discuss your planning. But generally, I would say that you should sell in the tax year prior to moving down to Spain. So, for example, if someone sold a property, let's say in September last year, they could have come down to Spain straight away and just spent 3 or 4 months in Spain last year, and they will become a tax resident on the 1st of January this year because they haven't spent enough time in 2023. So that's fine. The sale was done in 2023 and they become tax residents this year. But if they sell a property today on the 11th of Jan, come down straight away and live it for the rest of the year, then that will be taxed here in Spain. So you have to be very careful. You should be mindful as well that Spain does not recognize trust. So a lot of people from the UK, they've heard about trust arrangements. Maybe you have some arrangements being set up in your family that involve trust. That's worth reviewing in Spain, because Spain, being a civil law country, does not recognize trust. They don't know really what it is. They don't recognize the structure as such, and they look through it like if the trust doesn't exist, and like if the settler who put the money into a trust, like if they are still the owner of those assets. And finally, I think this is something that really impacts a lot of people. When you have a private pension in the UK or a workplace pension, many pension schemes allow you to draw when you're over 55. You can take 25% out as a tax-free pension commencement lump sum, which is fully tax-free in the UK, but is not tax-free if you receive it when you are a Spanish tax resident. So if you are planning to move down to Spain and you have access to your lump sum, you haven't drawn it yet, if you're allowed to take it, then the general rule is that you should take it. because if you don't do it, it's too late once you become a Spanish tax resident. And if this lump sum is surplus your needs and you don't have any plans for it, we'll be happy to offer you advice on how to reinvest it into a structure that works well in Spain, but at least you would have saved a lot of tax by having drawn it as a UK tax resident. Right. So that was it. I think we're getting to the final stages now of the presentation, Ryan.
Nice. Thank you very much for that, John. That was there's a lot covered there, but it made complete sense to me, and we've had loads of questions come in. So I think, do you have one more slide for your contact details that people can kind of...
Yeah, absolutely, yeah. This slide is just as a checklist for people moving down, and we are happy to send it out to people. If anyone wants this checklist, there's more. These are just the main tick boxes. We have a complete checklist we have to send out to anyone who's looking to move down. We're now going to move across to my contact details. So, right, what you see here is a slide with my QR code. So if you have your mobile phone in front of you, please bring it up and bring up the camera. And you can scan the QR code with your phone. And that allows you to book a complimentary financial review with myself. And it's a good opportunity, I think, if you're looking to move down, whether you're moving down in the next few months or next year, or even in the next couple of years. I'm happy to help you with your financial planning, maybe set up a strategy or things you should start considering before you're moving down. So feel free to use this opportunity. It's fully complimentary. You have nothing to lose by having a chat with myself, and I'll be really happy to hear from you. And I'm sure we can help you one way or another with your investments and pensions and make sure that they will work well for you at the time that you become a Spanish resident. You can also see my mobile phone number here as well, and I do have WhatsApp, so feel free to get in touch. And as I said earlier, I'm based in the Marbella office, but I do travel around across Spain to meet clients, and I do spend a lot of time in the Valencia office in Javier as well.
Nice, thank you very much for summarising there, John. Yeah, but make sure you reach out, and obviously most of the questions we won't be able to cover today. We have another 5-10 minutes worth of questions, but we will send these questions to Chase Buchanan on your behalf, and they will follow up and obviously and answer any queries that you may have. So yeah, let's get straight into the questions then. So Giles has just asked, I'm currently considering the golden visa and want to know if I have to pay interest, have to invest into a property, or are there alternatives that are reasonably secure?
Right. So the golden visa is part of what I call the investor's visa. So most people are familiar that they need to buy a property for at least $500,000. However, there are other options like that they are suggesting in the question. So you could possibly invest into Spanish government bonds. That's one way. And I think there's another option as well. But the other options is that you need to invest 1 or 2 million to do that. So it's out of reach for many people. So because most people coming down, they need to buy property anyway. And with the property price as they are now, $500,000 into property is not the same as it was like 5-10 years ago. So I would say for investors visa that the property option is the most common one because it's got a much lower threshold. But certainly if you're happy to put those monies into Spanish type investments, we can look at the options at a higher threshold. But in practice, very few people look at that, to be honest.
Okay, yeah, nice. That made complete sense to me. So thank you for covering that. So we'll move on to the next question. So Paul has asked, I'm a UK resident considering to buy a property in the Canaries. If I stay in the Canaries, i.e. Lanzarote, for less than 183 days a year, what taxes will I need to pay, if any?
Right. So Paul is then considering just being a non-resident in Spain and just have a holiday home, basically. So if he's staying in Spain for less than 183 days, then he will just be liable to pay the property tax, garbage tax, just to own the property, and obviously the utility bills, etc. But in terms of taxes, he would only be liable for wealth tax in Spain if his Spanish assets exceed the wealth tax thresholds, which For most properties, that wouldn't be a case. But if he's planning to buy a very expensive property, then it's worth looking at the wealth tax rules in the region where you're buying to see if you may be liable for wealth tax, even if you are a non-Spanish tax resident.
Okay. Yeah, that summarizes it nicely. So Jean has just asked as well, are both the state pension and personal private pensions regarded as general income?
Yeah, state pensions and private pensions are generally regarded as taxed under general income tax rules. Sometimes it's possible to restructure pension income for certain types of pensions to make it more tax efficient, but it's something that we will need to look at on a case-by-case basis. So if they would like me to look at their specific pensions and see if we can improve them somehow when they move down to Spain, I'll be happy to have a chat with them and discuss this.
Okay. So we got a question on wealth tax here. I'm planning to buy a house for 500,000 euros. Will I be liable for wealth tax?
500,000. If it's 500,000 or less, then there's no Spanish region. If that's like the only asset they have, they'll be below wealth tax thresholds over Spain. But for example, if that person moves to the Valencia region, which is like Alicante and surroundings, the wealth tax threshold there is only 500,000, plus you have a property allowance of 300,000. So if that person has total assets of about 800,000, they could easily go above the wealth tax threshold, and they will need to pay wealth tax on the excess of 800,000. So it's worth, it depends really on the region they're moving to and what other assets they have.
Okay, so we've got time for 2 more questions. So yeah, apologies if I haven't selected yours, but I'm just selecting some ones that might be that have been said a lot, or will cover other people's queries as well. So Ross has asked, how would Spain know if you had a tax-free lump sum into your bank account?
So I worked in the finance world for over 20 years. And I've seen over the years that there's more and more tax treaties, and these treaties are becoming more and more strict. There's like more and more sharing of tax information. It's something called common reporting standards, which most large countries in the world have signed up to. And a lot of information just being exchanged on an automatic basis. And as I said, the amount of information is just increasing all the time. So I would always assume that Spanish authorities know. And if they don't know now, they're likely to know in a few years' time, because as these treaties become wider and wider, all kinds of information being exchanged right now. So I wouldn't take a gamble on it. I would rather just do the right thing. If you have a lump sum, just draw it down before you come down here. You've got nothing to worry about. It's going to be tax-free, then that's fine. You just got to seek financial advice and do the right actions at the right time, and you can avoid Spanish tax in a compliant manner.
Okay, nice. Thank you for clearing that up. So last question for today. So Ross has asked, if you sell your UK home after you bought in Spain, but did not make any money on it, i.e. had to pay a large mortgage, do you get taxed in Spain as well?
Well, if you haven't made a profit on a transaction, then there's no gain you can be taxed on here in Spain. But a lot of people get the gain mixed up with mortgages. So just because you have a mortgage, that for the capital gains tax calculation, the mortgage has no impact on the gain. The capital gain is what he sold it for, what he bought it for, and you can deduct any allowable expenses like home improvements and agency fees, etc. In Spain, you normally have to have invoices in your name if you made any home improvements. So be careful with that. I have some clients who did it via property management companies in the UK. And Spanish authorities has said, no, you can't deduct those expenses. Yeah, but generally, if you made a profit on a transaction, then normally they'll be taxed in Spain if you sell it in Spain, unless you can use the main home exemption or investment relief. Or then you need to look at if you qualify, because there are various requirements to qualify for that.
Okay, thank you very much for answering that, John, and thank you very much for today's session. So that's all we have time for today's session. So thank you, John, for sharing your knowledge with us today, and thank you to all our listeners for joining us today. We had some great responses and great questions, so hopefully we covered most of them, but if not, as mentioned, we'll get back in due course. So we strongly recommend you get in touch with Chase Buchanan directly discuss your requirements in detail, or we'll be in touch shortly with their details, like I mentioned. Before we finish, we'd like to invite you to leave us a review on Trustpilot if you found this webinar helpful. Be sure to check out our website as well. We've got loads of other great tools that you guys can use to find your dream home overseas. But yeah, thanks again, John, and happy property hunting to everyone. Thank you very much.
Ryan, thank you so much for hosting this event. Thanks to everyone that listened. And as Ryan said, lots of questions that we couldn't answer today, so feel free to reach out to me directly. I'm happy to speak to you.
Thank you very much, guys.
Cheers.